before we get into that, I wanted to show you this. So
Oh.
there's an economist named Joseph Stiglitz. He's a Nobel Prize winning economist. And
Oh, yeah.
yeah, so he had this whole thing about the Fed, and he kind of criticized what they were doing with raising rates. And I wanted to watch this real quick. It's a few minutes, but he makes some just astoundingly good points. So we're gonna watch that real quick. Oops. So Joseph Stiglitz.
I'm pretty excited about this because we've talked a lot about the Fed and what they're up to. So I can't wait to see what somebody who's got such a high level of expertise has to say.
Yeah, so we'll watch him kind of go over what the issue is.
Thought the source of the inflation that began in the post-pandemic era was excess demand. And you could understand why they may have thought that if they didn't do their homework. I mean, it's really bad economics because they saw that the government had passed this enormous recovery program. And if all that money had been spent, it would have been inflationary. But you have to remember back just a few years ago, there was an enormous amount of uncertainty. And because of that uncertainty, firms weren't investing and consumers were saving. And you can see the data on savings accounts piling up. And when you put it all together and you look what actually happened to demand, total demand, we call aggregate demand, it was below trend. It was below what it had been forecast before the pandemic happened. Why was there inflation?
So he makes a really phenomenal point there, which is the Fed. Hang on. Why is this going so slow today? Okay. So the Fed, when they initially started the rate hikes, part of it was because there was this attitude that, okay, we gave all this money to people during the pandemic, right? And they're spending it. And he's like, okay, well, if that were true, that would be inflationary, right? There would be part of what's causing inflation, right? It'd be a significant part. People weren't doing that. People were more saving money. And the fact of the matter is demand, even now, well, this is a little bit older, but even now is still lower than it was pre-pandemic. So demand is not driving up inflation. There's not like an increased demand for products, right? Otherwise, we would have had really high inflation prior to the pandemic. So he's saying you can't really use that. That's a bad metric to use. Something else happened here. And it's not demand. And then he talks about what the Fed's decision was and why it's a bad idea. But yeah, that's a really good point. So it's not that people are buying a ton of shit. That's not what's driving it.
I love zooming in on that because I feel as though, we're kind of sometimes being led to believe that has something to do with it. But he's saying it really doesn't.
Yeah, but if you watch...
Because people did started, saving a ton of money during the pandemic, but I feel like in many ways we're sometimes being led to believe that now that we've emerged for it,
right,
we're spending. I mean, they're spending more than they did then, but it sounds as though overall it's really still down compared to before it.
Right. But that's been the sort of the conservative talking point, which is the problem is that we gave out this big social welfare check to everybody during the pandemic so they wouldn't, so they could stay home and they wouldn't die of starvation, right? Which a lot of countries did. And that's what drove up inflation is we gave them all this money and then they went out and spent it and it drove up demand. That's the conservative argument. He's saying, well, wait a minute, it didn't really drive up demand. So your argument already falls apart right there. Right? Because if that were true, inflation would have been 11, 12% prior to the pandemic when there was a higher demand and more spending. So, I mean, it kind of just shoots it right out of the water.
We all know the reason. Car prices in the beginning went way up. Why? Was it because we didn't know how to make cars? No, we knew how to make cars. American auto companies forgot to put in orders for chips. And for want of a chip, you can't make a car.
So, Joe, just let me get this right. You're basically saying that there's economic incompetence at the Federal Reserve, the most important central bank on the planet. Is that what you're saying?
Yes. I would say, I would put it a little softer than that. What I would say is they were in a difficult job of diagnosis. There were some complications. Let me explain. There were some areas, sectors, places where there was a shortage from excess demand. And even in the case of cars, you could have said, well, if nobody demanded cars, we wouldn't have car inflation. But of course, if you wanted to kill the demand for cars, you'd have to kill income. And that's not a solution.
So that is it right there. And he just kind of nailed the whole point down, which is, okay, so like that was a big factor into this, was the price of cars was one of the first things that really shot up, right? And part of that is because the car companies in the US didn't have chips and they needed money, and so they started shooting up the price in order to cover up their mistakes. And then they realized they could sort of get away with it, and it wasn't negatively affecting demand. And then other companies picked up on that and started raising their prices dramatically, and realized coming out of the pandemic, it didn't really affect demand. It was pretty inelastic, right? People were still going and buying, even though the inflation was ridiculous. So the companies started just pushing this and pushing this and pushing this because they're trying to maximize their profits. So that's what drove inflation, right? So I mean, you could sit there and say it was greed or the price gouging, and it was. But the bottom line is, if you can get away with it, you kind of will. Which is that's just how capitalism works. If you can get away with it, it's a good move.
Oh God, I hate putting it that way. I mean, I guess that's true, but I don't love the energy behind that.
No, but that's kind of the flaw of the system. Right.
Right. It's kind of the, I guess, ugly side of it, like
right.
If you can get away with it, do
yeah, it's
not always a good thing. It's
yeah. I don't know if you ever read the book Dune or saw they're not really in the movies, but the Frank Herbert, who wrote Dune, there's a great saying in there where they keep talking about every civilization carries within it the seeds of its own destruction, because there's no perfect system. There's always going to be some huge flaw. And that's the huge flaw with capitalism, is that if you can get away with it, it's smart. It's a good thing.
Right. When some of the things you can get away with, maybe they're smart, but maybe they're screwing over a bunch of people, and that's not good,
Well, that's the point, is that you're exploiting labor to make more money. So the less I pay my workers, the more I get to pocket. Right? And so if I can get away with that, then I'm a smart capitalist. It's not good for my workers. It's not good for society.
It also makes you a something else too.
Right. That's my point. There's a difference between, like being a good capitalist or there's a big difference between legal and right sometimes. Right.
Right. What is legal?
Mm-hmm.
And what is morally right?
Right. Or ethically correct. Yeah.
There's a Venn diagram there, and you hope most of the things are in that overlap section, but there are outliers. So
but they ask different questions too. So yeah.
Right.
But here's an article with him. Let me show you this. So he so 3 reasons why further Fed rate hikes might make inflation worse. So basically, he's just going through that the Fed basically failed to address the issue. They misdiagnosed it, right? So he said, the real worry in my mind is they will increase interest rates too high, too fast, too far. Right? And that's essentially what they did. And in his book, The Price of Inequality, Globalization and Its Discontents, which are both good books, So while there were, what was it? Said that while there did need to be an adjustment from the zero to near zero interest rate policy that has prevailed since 2008 after the housing crash, there were three reasons an aggressive Fed course could stoke inflation. The first is that the overwhelming source of inflation is supply side disruptions leading to higher prices in oil and food, even causing
Yeah,
shortages.
we have talked about that so much. Like, gotta look at that side of it. Sorry, I know I'm being disruptive, but
Right. No, but he's not wrong.
right, of course.
No, I mean, there was a supply side disruption. That's what initially started it. And
Right.
then what businesses realized is, well, we have to rack up our prices. And then when they did it, they realized it didn't really affect their demand. So they just kept racking up prices. So he asked this.
But the problem is, like, is it real demand, or is it just because there was pent up demand because people couldn't get certain things, their regular things, because there was this shortage for a long time? Like, is it really that there's so much demand?
Right. Well,
or because the supply had been withheld? Do you understand what I'm saying?
The confusion is that demand itself plummeted during the pandemic because we were all pretty much locked in our homes for a year or year plus, right? People weren't going out or spending, right? That's his big point. And then what happened was when it kind of started to ease up. All right, it's still a pandemic. I don't know if it's a pandemic, but it's at least an endemic problem. But the thing is people started going out. Well, demand was up. People wanted to go out. So it didn't really, things that would negatively affect demand, like raising the prices extremely high, didn't. Probably because of the general attitude of people coming out of the pandemic was, well, I know it's more expensive now, but, I don't want to go sit at my house anymore. Right? So, I mean, there is some of that. But he asked this question here: will raising interest rates lead to more oil, lower prices of oil, more food, lower prices of food? The answer is clearly not. In fact, the real risk is that it will make it worse. And he says, because what we need to do is make investments to relieve some of the supply side bottlenecks that are causing such havoc on our economy. It's going to make it more difficult. So he's saying the supply side issue that drove this is what needs to be addressed. And the supply side issue that drove this is basically a failure of capitalism. Because if we're shipping goods, we don't want to have a whole fleet of trucks and guys sitting around that we're paying for. So we tend to, like, the trucking industry is a great example of this. So we tend to pay these people on contract or by the hour. Or we don't own the truck, so we don't have to deal with the cost of the truck, right? The truck driver owns the truck. So we're only paying them for certain things. Well, so what happens when there's a pandemic and we're not selling much is we just cancel all those contracts. Essentially stop paying everybody. Right? Well, then what happens when it restarts? Well, it's harder to get all those people back now because we got to rehire and do new contracts. Right? And shipping was the same similar kind of situation where, it just sort of shut down because there's no profit in keep maintaining these systems when we're not making any money, when there's no demand, right? So they basically kind of shut down the whole supply side for the pandemic because why would we do that? We're just bleeding cash as a company. And then when it comes back, oh, great, now we got to rebuild it all from scratch, which takes a lot of time and a lot of money.
Right.
And so,
wait, that's not instantaneous?
No.
I mean, I do have a magic wand in the back room, but I don't think it works that way. I don't just ta-la.
Right, but he says we need to make some investments to relieve some of the supply side bottlenecks. What he's basically saying is we need to make it a nonprofit or a government sort of program where the government pays these people, because it's like that's what the government's for. And I know, like, a lot of idiots will say government should be run like a business, and it's like, you're a moron. When's the last time the Navy turned a profit?
I mean,
They
I
don't.
feel like that's not
Right, that's my
what this.
point.
That's not what they do.
Right.
That's not the point.
Right. That's not the point. That's not how government's supposed to work. And the bottom line is with the government, it's different. Like if military and police and firefighters and trash and the post office and all that stuff that the government runs, if that's the service and we're paying for it with taxes, right? Why don't we get a chance to refuse it? We don't. Taxes are mandatory. So the way the government raises money, they can force upon us. The only way that goes wrong is if they, if it gets to the point where it's ridiculous, we all start rebelling.
Right.
Right. But it's one of those things where it's like, it doesn't work like a business at all. When you're the one printing the money, you're on the opposite side of that spectrum. You're the bank in Monopoly. You can never go bankrupt. Right? Right.
It's true.
So his worry is that, okay, so you raise interest rates, it gets reflected in rents, and there's a Federal Reserve study showing that, right? So we're raising the rates, rents are going up, cost of stuff is going up, housing prices are ridiculous. So he just kind of goes through this on where he talks about, okay, here's a great one. One indicator that they're not really capturing is what's going on with real wages, which normally go up when labor markets are tight, which they are now, right? Real wages refer to, wages adjusted for inflation, right? Labor markets are tight right now, which means there's more jobs than employees, right? Prices of goods are going up because of inflation. We all know that, right? So that should mean you should compensate workers even more. But that's not happening. Why? Because as a good capitalist, why would I do that if I don't have to? It cuts into my profits. That's why all the workers out there striking now. How many strikes have we had just in the last year? How many labor movements have we had in the last year where they're asking for more money? You even have the president of the United States going out to a strike.
Right. How many near strikes? How many strike threats?
Right. When have you ever even heard of a president? Maybe your local House representative for the state or something, but the president? No. So he makes a good point. And like he said at the end of his video, the real problem is that what the Fed is trying to do is lower wages, which are already too low. These people should be getting paid more. It's not balanced in the economy. And so what happens is now you get too many people at the top with too much money and too many people at the bottom with not enough, right? And it's not going to help inflation because these people are going to be desperate for whatever they have.
Right.
You're not really solving the problem. You're just dumping it on the working class and saying, just shut up and do your job for really low pay, even though you'll never afford a house or be able to get married or to really have kids or do much of anything. And like, if you guys really want to blow your mind, look at because I love it when boomers do this. Well, when I started working, I was only making $3 an hour. And it's like, yeah, you know what that is today? I mean,
yeah, you're $3 an hour. You could also buy an entire house for $10,000. It's like,
right. $3.25 an hour. Let's do that. That's over 40 years, right? That's $13.90 today if you factor in inflation. If you factor in cost of living, it's closer to $25. That's why when they say $15 an hour, $25 an hour, they're not pulling those numbers out of their ass. I mean, they're measurements.
Right,
So,
of course.
So anyway, I thought that was interesting. I thought that was because he's basically in a much more intellectual way kind of hammered home the point that we've been making. And he did it very simply. I think he did a great job. So
before we move on,
yeah,
this is only sort of sideways related, but I have to put my plug in for something I love.
What's that?
So Alexius has recommendations for you all. So those of you who like to travel, in Stockholm, Sweden, there is this very cool museum that sounds like it would be super boring. It's the Nobel Museum.
Oh yeah.
And it's a whole really cool museum about the Nobel Prize and the varying winners and how they work. And it is really just cool. And tidbit of info, only one of them is in Norway and all the rest of them are in Sweden.
Huh.
Oddly enough, there is one, you can correct me if somehow I've gotten this mixed up, but it's the Nobel Peace Prize, comes, I believe, out of Sweden, or out of Norway, and all the other ones come out of Sweden, I believe. There's only one. One comes out of Norway, got assigned to Norway, and everything else is Sweden.
Yeah.
But there's this fabulous museum, and I was on the fence about going to it because I was like, is that going to be super boring? But no, it's very cool. So if you're in Stockholm, don't skip that.
All right.
Don't
check it out. Yeah,
Check it out.
Sounds interesting.
It was super interesting. They did a great job.
Well, cool. Cool.
All right, we can move on now that I've told everyone where they need to go when they're in Sweden.
All right, nice.
Also, check out the ABBA Museum. I'm just saying, you need to dance with those damn holograms.
There you go.
Worth it.
All right. Well, since we're moving on to fun things.